Market Shots are short video segments designed to help you develop a trading strategy that you can stick with. Here to help you is the Chief Market Strategist for the Market Guys, A.J. Monty.
And welcome to our next lesson, which is the head and shoulders top. It's a very popular topping pattern. There's some misconceptions that I want to straighten out for you, and then we'll get right into how to trade the head and shoulders top. Head and shoulders tops are great candidates for the short seller who's looking to make money on the way down. Let me first describe this to you. If you look to the left, you're going to see a price pattern of green candles. Here's a short-term upward trend. Now this is a weekly chart, it's not a daily chart, it's a weekly chart. So each one of these candles represents a very strong buying week. You'll see here it's a spinning top right at the very top level of this particular move or leg in the stock. You see this is considered to be the left shoulder. Now, once the left shoulder is formed, you see an upward leg followed by a downward leg. You'll generally see another upward leg. This rally or leg over a series of couple of months here is also a point where we can draw another resistance level. Now this middle resistance point right here, you have the left shoulder, you have the head followed by the right shoulder. Now here's the key. When the right shoulder is lower than the head, this is a sign that the buyers have failed to rally over the top. Now, this is your signal, but the trigger point actually comes later on down in the longer leg that follows to the downward level here. Now, just before the right shoulder right here, you have a support level. You could also see that there's a support level back here. Now, this support level many times is still going to be lower than this support level, so you have higher highs followed by higher lows. But when you see the first lower high, you'll generally see a lower low to follow. So this is going to be a trigger point right here for you. This is where I start to take really some short positions. When I see a breakdown, especially on a bearish engulfing pattern like we see here, bearish engulfing pattern with a break below this support level is a time where I start shorting. However, this neckline right here is really where you take a more aggressive short position. So when it breaks down below the first support level here, you're going to start to take your short position. You would then add to your short position as the stock goes down. You get very aggressive on this break right here. Now that's how you would trade a head and shoulders pattern. But the key in learning how to trade a head and shoulders pattern is knowing how to defend against a failed pattern. What do I mean by that? Well, if a stock fails to break down below these lows, it could very well start its way back up, breaking over these highs, and now you're back into an upward trend. So you got to be really careful. Once you short the stock below this break of the support level, you want to put your stop loss orders. These are going to be buy stops, because remember, you're shorting the stock, you're selling it first. You'll buy it back later to close the position, but you put a buy stop in this area right here, and then you do not touch that again. If it fails to break down, especially below the secondary support level, you do not touch it. You walk away, go look for your next head and shoulders pattern, and move on. Now the key here is that when the stock starts breaking down below a head and shoulders pattern, the sellers get very aggressive. And what happens is, what you want to do is you want to trail your buy stop down with the price of the stock as it drops. What does a trailing buy stop do? Well, if you're short, it's going to lock in your profits as you start to move lower. This is a very exciting time for the short seller. It's when you're right and it feels good, your emotions are flying, but don't let that get away from you. You want to be very aggressive at protecting your profits, because again, if a head and shoulders starts to reverse and you're not covering yourself or protecting yourself, it could be very painful. So hopefully you're staying tuned to the market shots that are given by the Market Guys and the rest of the Market Guy team. Stay tuned for more information. Be sure to visit our improved www.themarketguys.com for more information. Keep those stops in place. Have a great trading day.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.